In today's show, you'll hear investor perspectives on the COVID-19 impact on startup fundraising. This is Investor Perspectives. I'm the host of Investor Connect, Hall T. Martin, where we connect startups and investors for funding. It's the time of COVID-19. We're in lockdown looking to reopen the economy in the U.S. The virus has changed the way the world looks with empty streets, shuttered stores, and death counts rising. There are signs of flattening the curve, so we now look to the other side when the economy will reopen. I hope you enjoy this episode. Our guest today is Evan Cohen of HealthBox. So what new investment thesis will we see in general from the COVID-19 pandemic? What do you think we'll see coming up as new areas of investment?
Yeah, I think there's already a lot of momentum around the increasing acuity in home-based service delivery. And there's just a huge shift in the acuity of care in the home setting, which was a trend that preceded the crisis. Whether it's urgent care or specialty virtual care like cardiac care rehab programs, at-risk providers and payers are realizing that they can provide high-quality care in the lowest cost setting. And that's also the setting that the patient wants to be treated in. And in the current climate, it's the safest place for the patient to be, especially when you're thinking about immunocompromised patients. You know, you see this trend clearly in place when you look at the quarterly results of a company like Livongo, or, you know, from a policy perspective, the way that CMS is changing their telehealth stance.
Great. And so what startup sectors do you think are going to be diminished or eliminated by COVID-19? What's going down and what's going away?
Yeah, this isn't quite a startup sector, but I will take the corollary to the investment thesis that I provided. I think skilled nursing facilities are going to be very challenged over the next several years as COVID remains a big risk to safety. Obviously, there's a ton of headline risk here, given the unfortunate number of deaths in nursing homes over the last couple months. That's also causing a big negative impact to occupancy rates. And, you know, government pay, which dominates this space, you'd expect state and federal budgets to pressure reimbursement, where at least on their Medicaid book of business, they're already losing money. Facilities are going to have to shrink their bed counts to adhere to safe social distance practices. And unfortunately, I think there's probably going to be an army of lawsuits that are going to hit operators that have made those headlines.
And so what other areas do you think we might see changes in? I've noticed that groups like Medicaid don't let you use any telehealth or teledistance applications in healthcare. Do you think we're going to see changes in the law around those things?
I expect there to be long-term changes in telehealth regulations. You know, it's interesting because the telemedicine environment has been restricted for so long and often without a ton of rhyme or reason. You know, one example of that is state medical boards that enforce that a doctor needs to be certified in that state in order to be able to treat those patients. And you've seen, you know, some tailwinds over the last couple of years, particularly around nursing compact states coming together. You know, I think that acceleration is going to continue. Potentially, you could see CMS kind of stepping in and enforcing that those state medical board restrictions no longer persist. That's happened here during the COVID crisis. Unclear exactly which aspects of that regulation restriction will persist over that longer term period.
That's great. I also understand you can't use Skype in a medical application because it impacts HIPAA compliance. And I go back and look at HIPAA. It was developed in the past in mid-1990s, and here we are so many years later. And I wonder if we've really updated those laws since then. So it sounds like there's going to be a major overhaul of most of these laws for that reason.
I think that's right. There's been a relaxation in HIPAA around telehealth. I think that will likely snap back, but there's tons of updates that need to happen to HIPAA, particularly as you think about the new interoperability rules.
Mm-hmm.
And I think that's really been a catalyst to that discussion.
Great. Well, the last few minutes that we have here, what else should we cover that we haven't?
That's a good question. I think from my perspective, if you just take a step back and think about, digital health environment, if anything, my view is that the conviction around this particular space is going to persist. Clearly, there are going to be near-term tailwinds to deal activity, but I would be encouraged to only build conviction during this environment. That, the use cases that we've talked about for so many years and executing digital health strategies has really come to the fore during this period. Even amongst those companies that aren't growing so significantly, they're being leaned on to provide solutions and value to their customers. So I'm pretty encouraged by the environment and expect that things will pick up.
That's great. Well, appreciate your taking time to talk today and hope to have you back for a follow-up soon.
Great. Thanks, Paul.
Our next guest is Kevin King of the Texas Halo Fund. Great. And so what new investment thesis will the COVID-19 pandemic give us?
You got all these crystal ball kind of questions, but I think some of our experiences in the last couple of months are going to stay with us for a while, and some of them are just going to support things that we already knew were happening. I mean, online shopping with delivery, takeout foods, all of the conveniences that we were used to before and have been magnified in the last couple of months, that's all here to stay. It would be extremely difficult for me to get interested in some sort of retail, restaurant, anything along that line. Another one that I personally had experience with was a telemedicine visit that unbelievably convenient. It started exactly on time, was very quick, to the point, and very reasonable. All of those kinds of experiential things that can be done remotely will be there. I think there's also going to be an emphasis on increased inventory maintenance. So as opposed to just in time, so many people relying on just in time delivery and they got burned. I am personally involved with a couple of hospitals, one of which had the inventory. They responded very well, others of which were just in time and they were hurting. So I think you're going to see more of that. I think you're going to see a pivot from international sourcing to domestic sourcing. We have two portfolio companies that were working in China, both of which relocated. So they were able to do that during the middle of the coronavirus, which was amazing. But I think you're going to see increasing reliance on domestic sources. The same B2B SaaS and web-enabled everything will continue to be strong. There's anything at home, entertainment, home improvement, furnishing, anything that can be done in the home is going to be extremely popular.
No, I agree. I think we're going to see a move away from the just-in-time inventory to the robust inventory model where we never run dry, and you can shift from one source to the other as well. Because just-in-time, it takes all the cost out of it, but it leaves you without any supply sometimes. And I think people are going to trade that off for a robust supply chain down the way itself.
And eliminate the sole sourcing that's been going on so much, just like you said. Yeah, absolutely.
And then we also hear a lot of people talking about, have you COVID-proof your business? Can you work in a lockdown? Can you work can you continue if your customers are no longer able to work? And how do you COVID-proof your business? And how would you see that playing out?
Well, I think that people have discovered that there are a lot that they are able to work. They're more COVID-proof than they ever visualized they were. I think people thought that it was not possible to do a lot of this remotely, that is being done remotely. We just funded an investment 2 weeks ago. The company's out of North Carolina. We have never met them. Never met the people. We introduced to them remotely. We talked with them multiple times remotely. We did our due diligence remotely, and we funded remotely. And that's the first time we've done that. So I think that's interesting. I think I have a personal experience in my family. My son just got a job, has never met in person with the people at the company. He was interviewed remotely, onboarded remotely, and has not come into the office. So I think there's a lot more. I think we're discovering that we are able to do things more than we've ever thought that would be possible.
And so, what startup sectors do you think will be diminished or eliminated by COVID-19? What's going down and what's going away?
Well, we haven't invested in any, but we've seen a lot of travel apps over the last year and a half. I don't think we weren't doing travel apps before, we're not going to be doing travel apps now. I don't know how soon people are going to be interested in hopping on a cruise ship or sitting in a metal tube breathing recycled air from 100 strangers anytime soon. So I don't think those are going to happen. But on the other side, still on the travel subject, RVs, any kind of thing where there's personal or family travel that it limits interaction, which raises all of the marketplace questions about all the marketplaces. And we do have a marketplace-based travel app. Now, it got hurt, but not too badly, and it seems to already be coming back. But there's a philosophy. There's going to be some people who have no interest whatsoever in sharing houses, hotel rooms, cars, planes, swimming pools, whatever, with anybody else because of the cleaning issue. But then on the other hand, the opposite side of that, you're going to have people who say, well, I'd rather stay in a home, the Airbnb, VRBO model, rather than a 500-room hotel. So I think it's not clear yet which way that's going to go. But those kind of applications, I think, are in trouble.
Well, in the last few minutes that we have here today, what else should we cover that we haven't?
I think we've covered a lot, but I think the thing that I've noticed in the last probably 2 weeks is a change in attitude. And that is that people, particularly investors, are starting to realize that we are going to come out of this. I mean, there's a huge debate over whether we're coming out of it too fast or not, but that we are going to come out of this, that we are going to have some return to whatever we had before, whether it's exactly the same or not, who knows, but that there's going to be opportunities. There are going to continue to be early stage businesses that need to be funded, that have great ideas, and there are going to be people out there interested in doing that funding. And that's the role we hope to play.
That's great. Well, thank you for joining us today and hope to have you back for a follow-up soon.
Always happy to visit with you all.
My next guest is Rodolfo Dick, Managing Director at Prosa Ventures. Very good. And so what new investment thesis will the COVID-19 pandemic give us? What new things will we be investing in, looking for after the lockdown is finished?
Well, since this all started, and probably even before then, we've seen an uptick in different industries. Healthcare, for one. There's a lot of companies trying to provide telemedicine services, developing vaccines and cures, not just for COVID, but for a variety of diseases. Also, AI applied to healthcare has seen a great funding levels in the recent weeks, trying to read potential infections and help doctors with faster processing and diagnostics. I think another trend that is probably not here right now, but we should be on the lookout for, is there's another pandemic coming, and I think that's depression. So I think wellness will continue to be a key trend as we get out of the woods here. So a lot of the startups working on mental well-being and wellness, they're going to be also sought after. Education is a key one. I really have a hard time wrapping my mind around how all those kids worldwide, especially those in the worst situations, will fare with a lost school year. I think the education gap might widen, and we don't know how this generation will be affected in the long term. Having said this, we've seen a lot of online education models raising funds, and some other companies that were already in the market getting some more traction, faster traction. Cybersecurity is another sector that we see it's going to have a lot of potential. Everything is turning into digital. Cybersecurity is going to be top of mind for all the CTOs in the big companies. Also, contactless transactions, everything we can do to have payments without taking out our wallets or credit cards and just using our phones. I think that's other kind of services that we're going to be seeing more of in the near term. So I think those are some of the ones that we've seen. Last mile delivery as well. We've seen some uptick as well in the development of autonomous robots for sorting warehouses and also for delivering goods. I mean, it's still very early stage and very small scale, but it's something that was very hyped 2 years ago. People were saying that the autonomous trend was almost done, but this COVID-19 will help accelerate some of that autonomous hype in certain sectors. And I think last mile delivery might be one of those.
Very good. And so, what startup sectors will be diminished or eliminated by COVID-19? What is going down and what do you think is going away?
Well, that's a tough way to put it. I don't know if anything is going away. I think some things will change for sure. We are seeing a very drastic impact right now in all the travel and leisure, at least the short term. Well, we know for while we have a vaccine, if it comes to market soon enough, and also to see how many people are willing to take the vaccine, which is a whole different discussion. But I think travel and leisure is going to be impacted. Having said that, we've seen recently a couple of deals with Expedia and Airbnb that were able to raise funds, but that's because there was already too much capital at risk there. And those models, might come out stronger in the future. We don't know. Other sectors that we see that are being impacted is everything that's related to crowded spaces, even the sports settings, concerts, amusement parks, movie theaters. So everything related to that, it's hard to tell right now how that's going to be impacted. It all depends on the behaviors that people adopt post-COVID. Restaurants, for one, they're also being impacted pretty bad, especially smaller independent restaurants. They've lost most of their revenue, if not all. Very few, well, some of them resorted to Uber Eats and Grubhub and these kind of services, but they're not being able to compete with the big chains. And also commercial real estate. I think the trend of work from home is here to stay. That's going to cause serious implications for how we think about cities and how we think about work. So commercial real estate might also be in for a bad term, probably.
And in one last question, in your space, mobility, what do you think the impact is going to be? What's going to go down and what's going to go up based on the new normal that we'll be in?
Yeah, so I think we've seen, for instance, in China, that's the first country that came out of the lockdown. And in terms of mobility, people are buying new cars. They're afraid of getting into a mass transit and getting to the metro, and they're resorting to buying an extra car. So if you're able to do that, then that's a way to do it. But then the streets and the cities will collapse. I mean, there's no way that we have enough throughput to get all these people in their private cars. In the markets, I think what is going to happen is people are still going to do their daily commute, riding the mass transit, the metro. They don't have other alternatives, and they don't have the means, financial capacity to buy a car or to ride an Uber. And in other developed countries or economies, ride sharing is still going to be impacted. So we've seen, especially in Europe, a lot of the city governments implementing or opening the streets, repurposing the streets, making more bicycle lanes and scooter lanes and letting people walk in the streets. So that's a big trend. We're seeing e-bikes, an e-bike boom, huge in Europe, which might translate also a little bit in the US and Latin America. But for the most part, I think especially in Latin America, people are going to go back to the usual ways, probably wearing a mask or no mask at all. So it's going to be interesting to see how people react to this. I think it all also depends on how the leaders are approaching the situation. In Mexico, where I'm from, our president has downplayed COVID quite a bit. So people are not that afraid. So we'll see how this pans out.
Well, great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
I think we did cover this, but like I said, my perspective on this is optimistic in the big scheme of things. Humankind is still here. We've gone through different pandemics before. We had SARS, MERS, Ebola. And I think like every crisis, it presents good opportunities. We just need to weather the storm in the short term. I think most companies and funds have been focusing on that in the last couple of months, trying to get the companies to reassess their annual plans to prepare for the worst for the next 12 to 18 months. And I think the market's still going to be there once we get through this and once we get a vaccine in the market. So we're remaining optimistic, careful, but optimistic, and just also looking very closely as to how people react after this. I think, at least for me personally, I've been able to have some time to reflect on what's been going on, be more aware of my surroundings and what the different people around the world are going through with this situation. And we're in a very privileged situation, being able to work from home, having job stability to some point, and the financial capacity to sustain this. But it's made me think about how other people are weathering this and what they need to do in order to survive. And I think it's gonna stay with us for a long time. This is definitely gonna mark our generation, and we need to come together as a human society to get through this all together.
Great. I want to thank you for joining us today and hope to have you back for a follow-up soon. My next guest is Dan Kerr from Flyover Capital. Great. And so what new investment thesis will the COVID-19 pandemic give us?
So that's another one, it's kind of hard to say. We really look at the market and what's forming over time. There's some talk of flattening the world of funding. I think that would be a positive change. And I do expect that some funds will take a new view of geography, but I also don't think that that's likely to dramatically change. Just especially at the early stages, it's important to be there in person at times. It's something we work really hard at because we cover a large geography. And so we know that it's a lot of effort to really be there when you have companies in a lot of different places. So I don't see that completely changing, but I do see some funds taking another step in the direction of being distributed or, less geographically focused in where they're investing. Clearly, e-commerce and delivery is being taken to a whole new level right now. And so I think that's one area that's likely to get continued focus and new opportunities are opening up. One that I'm really interested in is durability, just durable business models, flexibility of supply chains. I think that's just become even more obvious now that, some companies were very concentrated. They were concentrated in countries that maybe we don't have as great relations with as we would like to have. And so I think that this really exposed some very interesting things in the supply chain that are, pretty dramatically shifting under our feet right now. And those are problems that are likely to, I guess, the issues with things like supply chain are likely to endure. Large companies are likely to continue their shift in how they're managing their supply chain. And there are technologies that are likely to step in to assist with that. Along those same lines and thinking about potential kind of positive outcomes or kind of areas where there's a need for more durability, I think that just the nature of what we're facing with COVID being sort of this hidden enemy that could dramatically affect us all has opened everyone's eyes to other similar types of risks, such as things that are happening in the cyber world that could be protected by better cybersecurity, data protection and privacy, also environment and climate. So I think that there's just so much more public attention to things that might affect us long-term that we have abilities to manage, but maybe we haven't given as much attention to as we need to. So I think that there are likely to be some interesting themes or theses around those kinds of things.
So what startup sectors will be diminished or eliminated by COVID-19?
So, I think clearly the physical world is being affected by this the most. It's, startups are, at least in our world, are largely software oriented, but those that are dependent on some kind of brick and mortar retail component are sure to be dramatically changed. If tech-enabled companies generally have some kind of e-commerce component, but traditional retail, of course, is just this has served as a catalyst to push companies over the edge that were already teetering. So I think that that's certainly changing the landscape, as well as kind of leading to some creative destruction of companies that will step in their place. I think anything that's related to close physical proximity, travel related startups, co-working are sure to come out of this and it looking very different. Anything that a bunch of people packed in a small space, I think It's not that we will never return to that, but it's going to be a long time, I think, before that normalizes. So I see major changes in certainly the work environment for startups, as well as startups that are focused on those kinds of models.
Great. Well, in the last few minutes that we have here today, what else should we cover that we haven't?
Well, I think that, to me, the most important thing is that, we're seeing people continue to pursue the opportunities that are out there. I think that, these are tough times for a lot of people, but like the last recession taught us, this is the time where actually a lot of opportunity is created, that there are ways that we can come out of this better than we came into it. So I think, that's really on the forefront of my mind is, whether it's people that were displaced because of their job or, their employer shut down, there are opportunities out there. There are ways to solve these problems. So I guess that's kind of what we're focused on right now.
Great. Well, I want to thank you for joining us today and hope to have you back for a follow-up soon.
Well, thanks very much. Thanks for having me on.
My next guest is Yaniv Snor, founder of the Mid-Atlantic BioAngels. Great. And so what new investment thesis will the COVID-19 pandemic give us going forward?
So I think for us, I don't see a lot changing. We are a life science angel investor group. We saw a lot of applications. Suddenly everybody put COVID-19 on their application, but we're not interested in that. I mean, there are currently 430 plus clinical trials in that field. So for us, it's like a mad rush. We're not interested in that. We're really sticking to our principles, which is, great management, excellent products that change the standard of care, markets that are large and growing that can support a strong exit. That is still going to be our bread and butter. And the reality is that there's always going to be a need for therapeutics, devices, and diagnostics. Whether we're in a pandemic or post-pandemic, we're always going to have a need for that. So we really haven't changed much of our focus in that sense.
Okay. And so we saw a lot of use of telehealth and some of these other healthcare tools coming up. What do you think the impact of the pandemic will be on those things, as well as, hospital, moving to the home, because not everybody can fit into the hospital during a pandemic? What do you think the changes will be there?
Yeah, I think pre-pandemic, a lot of hesitations for the adoption of different technologies that perhaps had a virtual component to them. As you said, moving people to the home, doing sessions virtually with doctors. I think now that it's become a de facto need and people see that whenever it is effective, I think it'll become the new norm for many ways, where it is cheaper, and if it's just as effective, it will absolutely do that. So I think everything that used to be brick and mortar and doesn't have to be brick and mortar in the future will move towards more of a virtual component. And I think, as you said, more telehealth, more things towards home. I think that certainly happened. I think we learned of new skills and abilities that we didn't realize that we had, or didn't realize capabilities that make sense that we're suddenly using, and we're going to adapt to them. We're going to adopt them post-pandemic. They're going to be useful for us.
Right. And so what startup sectors will be diminished or eliminated by COVID-19? What's going down and what's going to go away?
So again, we're looking only at life sciences, so I don't really know much beyond our group, but beyond our sectors. But I do think, as I mentioned before, things that are more brick and mortar are going to probably diminish somewhat. Things that can operate virtually successfully, like virtual office visits for doctors, etc. I think more and more of that will happen.
When you think about urgent care centers, it seemed like those sprung up because people had a hard time getting to their doctor and they needed something simple, so they just went to an urgent care. You think that's going to be diminished somewhat because now through FaceTime and other online tools, you can get back to your doctor or your primary physician?
I think more virtual will be incorporated, but in some cases, there's no second best to actually seeing something in person. So if you have a physical cut or a physical injury or whatever, that still has to be taken care of in a physical way. But to the extent that the diagnostic tools are there or will get there, where you can show a doctor a picture, whether you want to show something on your skin or other types of conditions where either through an app or through something else, somebody can remotely diagnose it, I think those will be more and more prevalent and people are going to be more open to those.
Very good. Well, in the last few minutes that we have here today, what else should we cover that we haven't?
I think there'll be sort of a silver lining to this horrible pandemic in the form of new skills that we didn't, and capabilities maybe we didn't know that we had, or things that we were forced to do. And beyond the pandemic, we'll actually be glad that we discovered and used them.
Very good. I had one last question. As we're rushing out a vaccine and making it, come to the market many times faster than it normally does, do you think this will be adopted for future therapeutics, an accelerated time schedule? Because it hasn't really changed much in the past, 20 plus years, but it seems like the possibility is there with digital therapeutics and other technologies to make it go faster. Do you think that's going to become a standard?
Well, I think we have to differentiate between vaccines and therapeutics. So vaccine is something that by design takes a long time to create because you need to, first of all, make sure that it's safe. And then you have to run it over on a certain amount of time, on a certain amount of people. You need to observe what happens. So time is baked into that process, and that has to happen. Therapeutics are things that, supposed to treat the patients, reduce the viral load, etc. I think in all of these cases where we did see the speed up is the speed in which organizations began to share data and to work together and cooperate and coordinate and do things together at speeds that have not been seen until now. Also, the FDA's response to these things has been at tremendous speeds. So all of those things that have to do with how we work with each other and how we focus our attention on things and how we research, that I think has sped up and has created a new paradigm that absolutely I think will happen again in the future. The things that we need to check and need to allow time for, like a vaccine, that you absolutely have to monitor people over a certain period of time to see that they don't get sick from what you're trying to help them with, that will still take a certain amount of time. But everything else that involves what we can control, I think absolutely there's a new paradigm for how people cooperate and coordinate and work together, which I am very hopeful will be implemented for many things to come.
Great. Well, I appreciate your thoughts today. Thank you for joining us and hope to have you back for a follow-up soon.
Thank you very much. Always happy to be with your podcast. Thank you.
My next guest is Gary Trauner, Executive Director of SiliconQuar. Well, great. So you mentioned before that the economy here is accelerating tech and certain other factors, but in a bigger picture, what do you think the new investment theses will be that the COVID-19 pandemic is giving us?
Well, I'm going to go back to something that I mentioned earlier, because two things that I mentioned earlier, because I think they go together. And it's the ability to find customers. It's knowing that you've got a business that has the ability to bring in revenue, to make sales, whatever the case may be, whether it's a product or a service. And in order to do that, you need to look at how has this fear and uncertainty that the virus has created, this pandemic, how has that impacted that industry and that business and the potential customers in that industry and in the business you're looking at? To me, that is the overriding theme of this whole thing. And I'm going to give you just a broader example. It's not a specific company, but again, I've been here for 30 years, but we live in a very high traffic tourist area, right? We live where Yellowstone National Park and Grand Teton National Park are located. And we get our local businesses do probably 2/3 to 3/4 of their business during the summertime, from Memorial Day through Labor Day. And it's based on, industrial tourism, volume, lots of people coming through to visit the parks and patronizing the businesses that are in our community. But with the fear and uncertainty, that volume's going to go down in a big, big way. And as a community, we're dealing with that right here, and how to give people the confidence and the comfort that if they come, they'll feel safe about not getting the virus. They have the confidence that they can come have a good vacation without them and their family getting sick. It's the same with businesses. Looking at a specific business and saying, what customers are you going after? How comfortable are they in this new normal, in this new environment? And what's the impact going to be on their fear and confidence and uncertainty? Because those are the things in business that will kill business, right? Uncertainty and fear. So to me, investment thesis wise, I'm looking at sort of the big picture, and then we'll drill down from there.
Great. So what startup sectors will be diminished or eliminated by COVID-19? What do you think is going to go away and not come back?
That's a tough one. Again, industries where people are concerned about their health and safety. So I don't think that travel is going to go away, but it's going to look very, very different and maybe not as lucrative, recreation, travel, things of that nature as it did before. Health clubs, things where people gather in a big way. I was reading about a company, the name is escaping me, but they're in the apparel business. And what they do is they're basically online e-commerce, but they do have some bricks and mortar stores, but you can't buy any clothing at their stores. All you can do is go and try it on. And if you like it, then you have to go buy online. That's a business model where you don't need large volume of people coming in, trying on clothes. If I come in and try on a shirt haul and then you come in after me and you don't want to touch that shirt because you don't know whether I'm infected or not, right? Businesses are going to have to think about how to sanitize, et cetera. That's an industry that's going to change. I don't know if it's going to go away, but it's going to change in a big, big way. And apparel, as I mentioned earlier, and footwear and clothing is a huge business in this country. So, even the automobile business may be different. How do you virtually sell automobiles versus having people do test drives in vehicles that other people might have been in? You don't feel comfortable. You don't know who's been in that vehicle. So I can't tell you specifically which industries are going to go away, but I think it's the high touch industries where people gather together or where people, are touching physically and getting away from that. They're going to be hurt and they're going to have to figure out how to change things. I think supply chain is also going to become under a lot of scrutiny. We're seeing now how there's been such specialization in our supply chain, which really led to a lot of efficiency. But at the end of the day, if you can't get a single component for a widget that you're building because there's an issue in our country or another country with the supply chain due to the virus, closing of factories, whatever the case may be, that company is going to have a hard time building and selling its widgets. So I think for companies that are manufacturing firms or firms that assemble things, making sure that supply chain is robust and has redundancy is really important.
Great. So what do you think are going to happen in industries like co-working where they depended upon sharing of desks and chairs, et cetera? Certainly that's going to change. What do you think that's going to look like?
Well, it's funny that you asked that question because one of the programs that we offer as Silicon Couloir in our region is we own a co-working space. And it's small. And real estate is incredibly expensive in Jackson Hole, the town where we are located. And so we have a lot of users. And I thought that so fundamentally, I've never been a huge believer in co-working. I think that it's when you have long-term liabilities and short-term assets, meaning revenue, right? So you have to sign long-term leases and do a lot of capital improvements to fix up your space. And then the revenue stream that you get is based on short-term commitments from users. That industry was always ripe for trouble when a downturn came. Nobody saw this, but I think it's going to have to evolve. And we're evolving absolutely as well in our small little co-work space that we have now. We're a nonprofit. We're not looking to make money. We can offset some of the financial losses in our co-working space with donations and revenue from other programs that we have. But I think for companies that are looking at co-working, they're going to have to find a rationale to convince industries and companies and individuals to come into a densely populated space, right? And make use of what they offer. So I don't have the answer, but I think that industry's in trouble. I do. I think they're going to have to make some major adjustments.
Yeah, I agree. I think it's going to have to move over. Just like in manufacturing, we used to have a mentality or method of just-in-time inventory, as efficient it can be, as tight as it can be. I think that's going to give way to maybe what we might call a secure supply chain, where you will always have your product no matter what. May have a little bit more slack in the system, a little bit more inventory in the system, but running out is not an option. And maybe we'll see a shift in that direction. What are your thoughts there?
Well, I agree. And I think, we touched on that earlier, actually, a little bit. Supply chain, robust and redundant supply chains are going to be critical. And it's really easy to forget that not that long ago, Hall, just-in-time inventory didn't exist, right? Before, strong computing models and computing strength grew, et cetera, people basically held lots of inventory, right, for manufacturing and other things in warehouses and storage. And they tried to turn it as fast as they could. But, that was a fact of life. And we've gotten more efficient because of technology, right? That also clearly in something like this has shown us that it's fragile. It's more fragile than I think we thought it was going to be. And so I agree with you. I think more robust supply chains, again, more redundancy, maybe a little bit less efficiency, right? And a little bit more of a bloated balance sheet. Bloated might not be the right word, but in order to make sure that you can service your customers and produce your products are going to be the new norm. So I think that's the direction it's probably going to go. You're spot on.
Great. And I remember 6 months ago, robotics and AI, they were coming to take your job, be afraid. And now we're looking at those things for actually securing the supply chain and combing through all the data that comes out of the medical devices and so forth, that it seems like the attitude will shift and go forward in robotics and AI in a bigger way. I know investments in robotics are way up and AI was always up, but seems to be accelerating.
Yeah, I think robotics and AI are, we're inevitably going to sort of take over, right? I don't know that they're going to take over tomorrow. AI is not quite there yet in a lot of ways. Robotics is rudimentarily there in some ways, but I think it's going to accelerate as well. I think absolutely. And then the question really becomes, what do we do with people that, are workers, right? What do we do in an economy where robotics and AI are taking away jobs, right? And we're becoming more efficient from that perspective. So there's some big changes coming down the pike. And I think this pandemic, things like this always produce stress on the system. And they tend to highlight where there are shortcomings or where the system is not robust enough to handle things. Supply chain, I think we talked about as being one of those. And I think we're going to have to rethink what it means to be an employee and what it means to have an economy that is moving in a direction where maybe we're going to get away from, quote unquote, full employment because of robotics and AI and some of the changes that we're seeing. And I don't have the answer to that. All I know is that you've got three major sectors in your economy, or, you've got the private sector, the public sector, which is government, and then the nonprofit sector, essentially. And all of them are going to have to play a role, I think, going forward to make sure we stabilize and can get things done. But I do think there'll be more innovation on the medical device side, right? I mean, there's incredible opportunity now for, we've seen demand for pulse oximeters go through the roof, right? So you can measure your oxygen level. Wireless thermometers that you can, point at someone's forehead and take their temperature. All sorts of innovations that I think we haven't even thought of yet.
Well, great. So in the last few minutes that we have here, what else should we cover that we haven't?
Well, again, I'm sort of a big picture guy, and I just want to emphasize for your listeners from my perspective, and I'd love to hear people with different points of view, because it's, I think having this conversation in a time of uncertainty is very important. And hearing all points of view, but I'm going to go back to the way I started, and that is that we're in a crisis right now that's created fear and uncertainty. And those are probably the two biggest enemies of commerce, because if people are fearful or they're uncertain about what's going to happen, they're going to pull back in and hunker down and sort of do the best they can just to survive. And we don't, we want to emerge from this stronger than ever if we can. And the way we're going to do that, in my view, is to find ways to remove that fear and uncertainty, provide confidence. And I think the private sector has a huge part to play in that. I had someone come to me the other day and suggest that almost like Disneyland, we should have, technology and bracelets with Wi-Fi in them to for people that come visit our community. And so, if they've got a bracelet on, they've been tested. There's privacy issues and all sorts of things. But, people are going to get creative in figuring out how to make people more comfortable so that they're willing to step out and participate in our economy again. And I think the big thing is to remove that fear and uncertainty.
Well, that's great. Well, I appreciate you taking time to share those thoughts with us today, and looking forward to seeing how it works out in the coming months as we come out of the lockdown and go back to what will be a very interesting new normal.
Yeah, it's going to be interesting. And I think we still don't know what that new normal really means. I'm hunkered down here with my 20-year-old and 26-year-old who had moved out of the house, both of them, and they're back with one with a girlfriend. My wife and I love it, but I'm sure they're not so happy about it. We're going to have to see what happens because they have a life to live, and, we're all trying to figure our way through. So it will be interesting.
Great. Well, I appreciate you taking time to share that with us today.
Thanks, Hall. Really appreciate it.
Thank you for joining us today. As always, be sure to leave a review, subscribe to this podcast, and share it with others. Let's go start up something today. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.